Greetings, family. Welcome to Harrell Kegler Presents. I am Dr. Jamil Harrell Sims, CEO of Harrell Kegler Interventions Incorporated, Professor of Communication Studies, African American Family Studies, and Cultural Psychology. Welcome, welcome, welcome. Tonight, this evening, we're going to talk about some real serious stuff. Now, I know we have all these elections and everything going on, and we keep talking about an agenda for our community. But one of the things that we have to discuss, so this is not going to be a feel-good situation here. We have to talk about protection. We have to, this evening, family, we're speaking about real serious business. So this is part one of a three-part series on financial literacy. I want to introduce my guest, a young entrepreneur, wonderful brother here. He chose to build his life in the financial industry because one, it's lucrative, and two, because he wants to help us, our community, as well as his family. I want to introduce to you Andrew Sims. Just happens to be Sims. Welcome, Andrew.
Thank you, Dr. Sims. By the way, I love your last name. I think it's a very good last name, as you can see.
Yes, it is. So
thank you for having me.
Oh, you know what? It's a pleasure to have you on the show. Just curious, how did you get involved in the financial industry?
Actually, funny enough, it's a blessing and it's God's way of blessing you, right? So in a sense, one of my family members, a close friend of the family, ended up passing away, and the extended family on her side actually was already involved in the financial industry, and it had already piqued my interest. But when he presented it to me, it was like, hey, I think you'd be good here. You're young, you're entrepreneurial, you're business minded. And I just decided, hey, you know what? More so than the money, I want to do this for my dad, right? So let me tell you guys a little bit about the wisest man I've ever met in my life, right? He had me at 63. So as you guys can tell, he's a little up in age, right? But when I was born, he decided to step down out of his career and take care of our entire family. We come from a pretty big family where I'm used to there's being 13, 14, 15 people in one house, right? A 3-bedroom house. Not a great financial situation, but there was love, right? So I wanted to reciprocate that love and that wisdom. So I went ahead and took advantage of the opportunity I was presented with. Now, my initial goal for myself was to retire by 35. But to do that, I knew I had to make some serious money pretty quickly, right? Time's winding down. I got to make it happen, right? There's a sense of urgency there. But more so, my father always made sure that no matter what, if he had it, we had it. So I wanted to make sure I reciprocated that. And if I had it, he had it. So what I did was I put together a 2-year plan where, okay, at the end of this 2 years, I'm going to take my dad to Louisiana, his hometown in Louisiana, where he can reconnect with some of his siblings and cousins and things that he's lost connect with. Now, unfortunately, God has a funny way of just making it happen for you, right? We were able to send him on a trip to Louisiana. He was able to connect with his family earlier than I thought. My siblings and everyone pitched in. But what actually, I would say, is the blessing and the curse in this, I got into it for him, but I continue for him. All right. So my dad worked as a truck driver for 53 years, started driving trucks when he was 12 years old. That was the day he first stepped into a truck, when he turned 12. He was driving since then. Now, he never really had someone like myself or anyone in the financial industry to tell him, hey, Walter, I know you're making all this money and you're taking care of your family, but you need to prepare for the day that you don't want to do this anymore, or you can't do this anymore, right? No one told him about retirement, savings, proper life insurance planning. None of that stuff was covered. Not even a trust and will was covered with him. Now, when I got into the industry, I recognized, okay, this is something I don't know, and I know everyone in my family needs to know this. So I'm going to be the one to break that generational curse of living in poverty or situations of financial illiteracy. That's really why I continue to do it, is to build a legacy of breaking the chain of financial illiteracy and unconditional love all around, right?
Yes,
So
yes.
to make a long story short, I'm here to serve because I believe that your service towel should be a lot bigger than what it is. No matter if it's this big or this big, it has to get bigger and you have to continue to serve people. That's where joy comes from, not happiness, because happiness is built on something happening. But when you have joy and fulfillment, that's a completely different feeling. So that's
Wow.
how I got involved with the financial industry, and that's why I'm still involved with it.
Wow. See, oh, this just makes me so proud. This is our younger generation stepping up. So, to our audience, I want to give a little background. So, of course, I'm not in my 20s. And when I was in high school, there was a thing called a Kiplinger letter. And the Kiplinger letter was a newsletter they would mail out to certain people to talk about stocks and bonds and the financial forecast and investments. And so my father would force me to read this. Now, I didn't want to read that. I want to check out Run DMC or whatever. This is like in the early rap era. I didn't want to look at that, but he would always tell me, you need to read this. Here, read it now. And so I would read the Kiplinger letter, and then A.L. Williams came, and I went to a couple of those meetings. So my father would always, he was always reading the paper. He was always, I'm like, why is he always glued to the paper? Why is he always talking about money? And what I didn't realize my father was doing was he was preparing us to understand that he came from Selma, Alabama, and they weren't, my family's kind of interesting because I have some very important and powerful people that have come from my family, but then I have another side of the family that has that different experience. So to make a long story short, my father was the one that drilled it in my head, life insurance. When I was 21, I had my first life policy. He drilled into my head, when you're making all this money, get an apartment building, do this, do that. And I was hard-headed and I didn't want to listen. And a lot of our community, we want to get the bag, but unfortunately, some of us want to get the bag and then show the bag instead of doing something with it. So with what's going on in our society, and this is not new, the only difference now in our society is everything is being filmed. Yep. That's the only difference. We don't think about retirement. So in this 3-part series, we're doing retirement and life insurance and investments. And each part is going to focus on something different. But I want to know from you, being young and knowing what to do, and can you tell our community what's really important and how to do it?
Okay, got it. So here's how I'll give you all a client perspective, right? Because that's probably the best way I can explain to you how to properly prepare for whatever comes your way, right? Whether it be retirement or an unfortunate end, regardless of whatever it is, you have to be prepared. I was taught by my father that it's your job and your responsibility to make sure that no matter what happens, you're taken care of and your family's taken care of. So in that sense, when it comes to life insurance protection, right? Because I believe in having the life insurance first, because we might have all these lofty financial goals and do all this planning, but at the end of the day, death's a jerk. He's not going to ask. He's not going to knock on the door, and he's not going to let you know when he's coming over. He's kind of like that cousin that just pops up when you're not home and he's in your fridge, like bro man from the 5th floor. That's it, right? Yeah. You just, okay, well, what are you doing here, right? So in that sense, you always, always, always have to have some form of life protection. Personally, I believe in having something that's going to last in a sense of it being permanent. And if you can't afford it, obviously term something, final expense. It doesn't matter what you have have something, because something is always better than nothing when it comes to that. Now, when it comes to retirement, start planning as early as possible. If you can start planning for your children's retirement, please do. If if anything, I would say I've learned that it's not our fault that we are in the situation we're in, but it is our fault if we don't get out of it, right? So when it comes to planning for retirement, that's kind of where my father failed. And luckily for him, that there was Social Security, right? And there was these government plans in place to kind of give him a bit of a platform to stand on, or a leg to stand on, really. But aside from that, for us, we kind of know where that's going. And I know for sure when I retire, there's a 90% chance that Social Security won't be around, or it won't be what it is today, right? So for the people retiring today, I still say don't rely on your Social Security, because about, I don't know, 20, 30 years ago, the companies and the government put it in our hands to make sure our retirement was set up. That's when pensions and, those benefit plans are set up, benefit plans or planned benefits, right? That's when all that stuff started to be phased out. And what replaced it is your typical 401k. So we were taught to go to school, get a good job with benefits, right? Save in your 401k and then retire, right? Now, what I've noticed, that's okay. That's perfectly fine. But if your only option, you're putting all your eggs in one basket, what happens if something like this year or 2008, where the basket itself falls? Then your eggs are cracked. You can't scramble anything, right? you can't cry over spilt milk. So I believe in having something where it's going to be safe, where you can grow money still, right? Obviously not in the sense of, okay, just put it there, let it sit, right? No, put it there to where it's going to be working for you. You always want money to be working for you. We all work so very hard for our money, but it's rare that you see, okay, my money's working for me just as hard, if not twice as hard. So in that sense, always have your money working for you. Always have yourself protected, because you never know when your end is coming, right? And make sure you're planning ahead, not just for yourself, but everyone in your family. So that's my take on retirement and life insurance. Always have it and get it as early as you can for as long as you can.
Here's the thing that I can say. When you're in your 20s, you don't think about it. But if, there's term and then there's whole. And term is great if you're able to build the wealth on the other side, and then you don't really need the term. But for our community, that's just really not a reality. It's not a reality to build, and then, you get ready to retire and you don't need the term anymore and you're self-sufficient. And that's the issue. I had a life license back in another time. And I tried to help the community. And that's what I found is that oftentimes we don't think about life insurance until we're like in our 50s. Well, then it costs so much money, especially if you want a whole policy. If you get it young, then it stays. And some policies build cash value, but I don't live in that type of community, but I used to see car washes, to bury someone. There's people GoFundMes, when all you had to do, even if it's a $50,000 policy, all you had to do was get a policy. And if something were to happen, now you don't have to beg relatives, put it on a credit card, go into debt, trying to take care of your loved one's final expenses.
Right. In that sense, I completely agree with you 100%. I'm 21 years old and I still believe I have to have life insurance. The chance of me passing away in the next 30 years or 35 years isn't nearly as likely as after that term has expired. Because by California law and state law, the maximum in any company that they can offer right now is 35 years. In 35 years, I'll be 60 or 50 something. One of 56, I believe, right? 56. Most of us, our genes are pretty good. I know the chances of me living past that is very, very high and likely, right? So it doesn't necessarily make financial sense for me to put money into a product where it's not going to be working for me. But at a certain date, then that product no longer covers me. Now, if that's what you can afford, please do it. Please. I beg you, not for your sake, but for your family's sake. Because I've seen situations where we as a community, we procrastinate, or we're like, yeah, I'm going to do it, right? And 2 months later, and this recently happened to me with one of my potential clients. I was like, hey, please get this in order. Like, I don't care about the sale. I'm not even going to make much money on it, but I want your family to be protected. 2 months later, younger guy like myself, I think he was like 30 or something like that. Younger guy, no, the probability of him passing away wasn't high, but someone went through a red light as he was going through, took him out. You know, and from there, now his family's struggling to pay the bills, right? Because as bad as we want to pay bills with hugs, it doesn't happen, right? I tried it. I tried to go into Wells Fargo and give him a hug and pay the bills. It just doesn't happen, right? Now, in that sense, if he had life insurance protection and final expense protection, the family doesn't have to worry about, specifically, I'm talking about final expense here, right? When you have a final expense policy and you have the right one, they pay out pretty quickly. Now, what that payout does is cover the final expenses, right? The funeral costs, the casket, everything like that, right? Now, that can be kind of tricky if you don't have assistance, right? Now, specifically what I'm talking about is, I'll give you guys a good example. My father recently passed away in April. Now, there's a company out there called Everest that I partner closely with. Everest stepped in. I gave their rep a call. I'm like, hey, I'm in the financial industry, but I don't know anything about the funeral industry. That's not my area of expertise. So I called the people who are. And because we partner so closely, although my father wasn't a client, they went ahead and negotiated on our family's behalf and set up all the arrangements. I'm talking about the casket, what suit he was going to wear, what color that suit was, right? Who was going to preside over the service, where it was going to be. And what really shocked me the most is they gave me a comparison of what the funeral home was initially trying to charge us and what they had brought the price down to. And it was significantly lower, right? Because their business is to make money on someone's passing.
And
That's just the
emotions
nature of the
behind it.
business.
Yes.
Exactly. So when you're emotional, you don't necessarily make the best financial decisions, right? Which is why they tell you don't do an emotional buy. Don't buy on impulse. Because you kind of go home and you're like, man, this dress is kind of ugly, you know? So in that sense, you don't make the best financial decisions, and you have maybe 9 days, 10 days to plan for your loved ones, all of their arrangements, and it's a huge financial impact that it can have on a family, right? So in that sense, it's better to have someone else do that for you that's experienced in that industry, that knows the industry well, that they're working on your behalf, not the funeral home, right? So I'll kind of cover that with you guys. They took care of all that. And then afterwards, they came to us and were like, hey, well, although he wasn't a client, this is what we did for you. And if there's anything else you need us to do as far as prepping any estate planning, right? And we'll kind of cover that in a second, right? But estate planning, trust and wills, what else do we need to do for you so you guys can just simply have peace of mind and grieve, right? And I think more so than anything, the reason why I love partnering with that company is the peace of mind they bring, right? It's an unmatched sense of calm and peace when you don't have to worry, oh man, what do I do? Where do I go? Who do I talk to? Or is this the right price? Is this the wrong price? Or how do we get the money? Let's start there. How do we get the money?
And now I want to interject because
Yeah.
I've seen, I had an aunt that passed away and she didn't have a will. And we had to go back to Detroit and we had to go through all her paperwork looking for a will. There's a there was property, there were money in banks, there were cars, there was all this stuff and no will. So what happened? Probate.
Mm-hmm.
Home was paid for, probate. And a lot of people don't understand. You don't want to write up a will, but or a living trust, and you are going to get into that. But I have been exposed to a couple of things in my life. I have seen families completely act ignorant when somebody passes because they want to fight over who gets what and this and that, and it tears families apart.
Have an example exactly like you just said, where it tears the family apart. People get ignorant. They literally get into physical altercations. They argue, they bicker. And you know what the state does? Okay, y'all can't figure it out.
We'll
I
take
got
it.
Don't worry about it. Sell everything. Pay me my taxes because I always want my piece of the pie. Pay your lawyers. Pay all the liquidation fees. And then you guys can deal with whatever's left.
Which is not much.
Yeah. So that exact situation that I described is exactly what happened when my grandfather passed away. None of us understood how wealthy he was. We always knew, okay, he's a pastor of a church. He owns a shelter. He has property in other states. He has multiple properties here in California. We all knew that, but we never took it into consideration. Hey, Grandpa's kind of getting up there in age. Well, Grandpa, what do you want to do with all this stuff in case you do pass away? And I think that is an uncomfortable situation or conversation to have, especially when you're talking about, nobody wants to talk about, okay, well, I'm going to die. But the reality is none of us are going to make it out alive. I promise you that.
That is true. That is true.
There's one guarantee. People are going to be born and people are going to die. And that sounds kind of candid or kind of rough, but that's the reality we live in, right? And that's an uncomfortable conversation to have, especially with your loved ones, right? But when it comes to planning, I think that's our responsibility, is to have those uncomfortable conversations and understand, okay, this is uncomfortable now, but imagine how uncomfortable it would be to sit across from your favorite uncle or your favorite auntie and think, they're trying to, get over on me, or they're trying to do this. Versus, I love my family. We should all be grieving, not fighting.
Say that for the people in the back. Yes.
Exactly. Right.
I've seen a lot of that. Now, living trusts are the way to go, but they're expensive.
Yeah, they can
but
be.
We have got to stop assuming. One thing I do want to mention as I interject is when you bank accounts, if you have a bank account, please put a beneficiary. Because if you don't, then you're going to be fighting the bank, trying to get the money to bury your loved one could be in the bank. The money to pay whatever bills need to be paid could be in the bank, but you can't access that because there's no beneficiary. So you should always have a beneficiary on your bank accounts, on your life. And, you can't get life without a beneficiary.
Mm-hmm.
If you own property, if you're husband and wife or civil, whatever it's called, if one person dies, you can't say, well, I'm going to send the other half to this family member, because by law, it automatically goes to the person who's on the deed with you, unless you have it set up a different way before you sign to take over that property. So these are things that, I want grandma's house. Well, I want grandma's house. Well, and the other issue is, and that's a whole nother episode, but why are you selling grandma's house? Because you're losing valuable property that can be handed down and help create generational wealth. Yes, this is a horrible thing to talk about, but this is also a way to create generational wealth, because we are the group that just doesn't have it like that. And we're trying to bring to you some responsibility so that not only can you protect your family from an untimely passing or someone retiring with not enough money and now the family has to take care of them, but this is a serious conversation that we have to have.
Absolutely, 100%. And in all reality, if you do, because you're going to have the conversation whether that person passes or they're still living. I
Right.
would recommend, I would suggest you have it while they're here, because grandma may not want you to sell her home. That's her home. She's worked for that. And if she doesn't want you to sell her home, then everyone in the family, I think this should be, it shouldn't be a, oh, well, only Uncle Joe down the way knows what grandma really wanted because she only talked to him. It has to be a family discussion, especially when you're talking about building generational wealth. Because I've seen it to where, okay, well, this person's built up a whole lot of wealth and they transferred it to their kids or their grandchildren, right? But the grandchildren had no idea how to run the business or the restaurant. So they sold it, or the restaurant went under due to poor management or ownership.
Mm-hmm.
Or the grandchildren are just like, yeah, whatever. It's that thing that grandma handed over. And they don't understand the actual value that they've been handed and been put into their lap. Because I can tell you for sure, even in my family, there's not a whole lot of wealth going around. There's a lot of spending, right?
Mm-hmm.
We get the bag, like you said, we get the bag and we want to go buy the new Jordans, the new this, the new that, all these material things, which are cool. I have no problem. Spoil yourself. Do that. You've worked for that. But at the same time, make sure that when you're spoiling yourself, you're not racking up debt trying to do it. And you're not going beyond your means to do it. I like nice things, but I'm not going to buy nice things if they're not going to be working for me.
Mm-hmm.
I'll give you an example. If I want to buy a suit, because I love suits, watches, and shoes, that's my flash, right? But if I want to buy a suit, I make sure I have 3 to 4 times the amount that the suit costs saved before I can buy the suit. I have to hit a savings goal before I get that, or whatever it is. And then after I do it, I make sure I'm only spending money on things that are like investing in myself, investing in my appearance, right? Like I need to get a haircut. That's an investment into my appearance, right? Versus, oh, well, I'm gonna go buy these new shoes, not because they look good or they'll enhance me in some way, just because my friend got them and I don't want him to have them and I not. That's not really a smart way to spend. But I'll tell you what, when it comes to the retail industry and just spending in general, our community, the Black community, is one of the largest spenders,
Yes.
but one of the worst savers. We have not a generational curse, but in a sense, it's a habit we've built in our community where it's okay. We've made it okay to not have wealth and to be struggling in case the water pump on your car goes out. That shouldn't really be an issue in our community because we make enough, we just don't save enough, right? So when it comes to savings, I harp heavily on that because I've never heard of anybody ever that went broke from saving too much.
Absolutely. You know, another thing that we don't do, we don't save, we don't think about our children's future. I mean, college is not for everybody. I'm really an advocate of trade schools. And the reason why is as a professor, I see all these degrees and they're still struggling. But when I need something done, you know, something fixed, I'm not going to call the person with the college degree. I'm going to call the person with the trade. And when I'm in Southern California, I don't see us in the trades. Right. Now, maybe in the South, we got it down, but because our numbers are lower here, I don't see the trades. I don't see any,
you're 100% right.
And so I don't find someone, the reason why I go on Black Riverside County is because they seem to be very progressive in, letting people know, hey, I have promoting trades and businesses. And so even though I don't live in the county, that's where I go to get things, or We Buy Black or any, some of those websites, and we're not there. We're not there. And so one of the things that we never save for, we all assume, well, my kid will get financial aid. Well, I can tell you, I have humongous financial aid debt, student loan debt. Of course, I'm at the top of the food chain in education, so I had to pay for that. But as an example, my daughter, I knew she was college bound. I made sure when she was born, she was going to be college bound. And so as the price of education rose, what I did was I did overtime and I stocked that overtime and I put it somewhere so that when she graduated from high school, the smarter thing would have been to send her to a community college for 2 years and save that money. But I had the money to send her straight to the university. Now, hindsight's 2020, I could have saved 2 years of that money. And then when she was ready for her last 2 years, then pay for that. And she would have been without any student loans. But
Right.
we live and we learn. So I'm saying this to you family from experience. There's nothing wrong with, we want the bragging rights. Oh, my kid's here. I went there. I went there, but you're still paying for it. It makes no sense to be in debt for undergrad when you can spend 2 years in a community college, pay cash, and then when you get your junior and senior year at the university, there's ways to go about that and getting that paid for. And that's not really a whole segment, but save money for that. We say, oh, my kid will be able to get financial aid. Well, you know what? If financial aid has changed and now your child up until the age of 24 is not considered independent. When I was coming through 18, you're independent.
Yep.
Now it's 24. So if your household is making 70,000, 100,000 a year or above, they're looking at your income, not that your child works at Chick-fil-A. Chick-fil-A?
Oh yeah,
Chick-fil-A.
Yeah.
Yeah.
So in that same sense, I came from a family where we qualified. We definitely qualified, right? But I'm so appreciative of my father because he valued entrepreneurship. And he always told us early, it's okay to work for someone else, but make sure you have a plan to get something of your own.
You'll never get rich working for somebody else.
Exactly.
If that's your goal.
This is what I've seen, and it's not always the case, but C's, they'll get you somewhere, right? The C students typically will become entrepreneurs, whereas the A and B students will work for someone else. Now, in our changing and evolving world, to rely on a job, for me personally, is just not optimal. That's why I'll give you a perfect example of why I chose to hold off on going and getting those big degrees and decided, hey, I'm going to jump right into entrepreneurship and try and get a business as quickly as possible. And what kind of really sparked that idea for me was before I even graduated high school, I was working at a warehouse here in Paris. Most of you are probably familiar with the DMSI or Ross, right? The store. I worked at their warehouse and it was okay. I ended up leaving there and going to another warehouse where it was all e-commerce based and it was simply a distribution center called Wayfair. I'm sure you guys are familiar with that one as well, right? Now at Wayfair, I decided I'm going to give it 110% of what I got, like my dad told me. And I'm going to try and get promoted as quickly as possible. Luckily for me, they were about promoting based on qualifications and your work ethic and not how long you've been there, right?
Mm-hmm.
So I was able to quickly become a manager there. But what I realized is I was 19 at the time. I was the manager, and there was a 45-year-old gentleman, amazing guy, extremely educated. He was actually studying for his doctorate. But what kind of sparked the idea of, okay, jump into entrepreneurship is there's no way that I would be able to say, okay, I'm studying for my doctorate. I have all these degrees in different things, and I've worked in so many different fields, but yet and still there's a 19-year-old kid who's my boss. I have to answer to him. He signs the checks. He's actually in charge of me, but I have the education. Now, there's nothing wrong with that, but the problem is if you're going to continue to just get more and more into debt and you're repeating the same cycle, I forget who quoted it, but the definition of insanity is to do the same thing and expect a different result. So and I feel like our community sometimes is a little insane, right? And that's just part of our personality. It adds character, right? But there has to be a line where you draw like, hey, something's not working. I need to switch it up. And for me, I recognize, okay, if I want to retire early, like I said, I want to be 35 retired. And retired doesn't necessarily mean, oh, I'm just going to sit there and do nothing. But it means I don't have to be anywhere that I don't ever want to be unless I want to be there. If I want to show up to the office and I want to go on to these appointments, I want to help people, then that's what I can do. But if I don't want to go, I don't have to go. Because in a sense, money's not everything. It's not. And the love of it is the root of all evil, as the Bible says. But we do need it to survive in our current economy, right? There's no getting around it. There's no faking it. You need it to survive and to thrive in our economy.
Now,
right?
I want to piggyback on that, the economy. Because I want you to understand that when the coronavirus hit, for the first time in our lifetimes, we saw our life change overnight.
Yeah.
And if you think that that's the only change that's overnight that's going to happen with this, I don't like politics, but it's all over the place. It's in your face. It's going to happen. We're going to have another change. And we need to be ready for that change. And we cannot depend on somebody we don't even know to make the difference in our lives. We have to make that difference. We are totally in control of what happens in our lives. I don't care who sits in the White House, the Green House, or the Blue House. It is completely up to us. I saw that. Completely up to us to make the difference. And sitting back saying, okay, I put this person in office, now they got to do what they need to do. You have to do what you have to do. And money, if I had someone tell me that they did not want to, their family member passed away, and one of the surviving family members said, I want to bless you with this large amount of money. And that person said, I don't want that money because then I'll lose my Social Security and Section 8. And I said, do you understand how this amount of money can totally change your life? All you have to do is get the right guidance on what to do with it, where to put it. They did not want that money. People, do you understand that there's an app called Robinhood that you can start using to play with stocks? Just take $100 and start playing with stocks and watching them go up and down. The housing market, it's going to go up and down. When the housing prices are down, that's when you buy.
That's the best
my
time.
house is not worth anything. It's upside down. Don't dump the house because it's going to come back up. So that's why this is going to be a 3-part series.
Oh, yeah. And when it comes to anything to do with money, right? It's all based on your preconceived notions of how it works, right? And your habits. If you are a person and you are a steward of your money, then more than likely, somehow, some way, money seems to continue to find you. Blows me away. just seems to find you. But if you're not a steward of your money and you don't pay attention to what you're doing, and when things go wrong, you're just like, oh, the world's gonna burn down. Or when things go wrong and you don't move the right way, it's gonna hurt you more than it helps you. Sometimes it's good to stay, sometimes you have to move, right? And the difference there is really, I would say, whatever you decide to get into, whether it's stocks, real estate, whatever it is, find someone who's an expert in that field, not just has the qualifications, but I say an expert in that field in the sense of they understand it very well, you trust them, you like them, and you have a relationship with them, right? So say, for instance, you wanted to get a financial advisor. You don't want someone you don't know, you don't trust, and you don't like handling your money. It's just not a smart business move, right? your real estate broker, if you are interested in buying a property, you probably want to like the guy who's going to sell it to you. You probably want to trust them that they're giving you a good deal on it, right? So in that sense, even just breaking those habits, like she said, put, I don't know, $100. Just think about how much you spend on fast food. Take away, I don't know, 3 or 4 McDonald's meals. Put that money towards actually learning something that's going to help not only you, but your family. Because now that if you learn it, you can teach them and they can teach their children. Like when your father had you reading the Kiplinger letters, that wasn't by accident. That's not something that just happens. You stumble across it. That's something that as parents, we all have to, okay, hey, I know you like your video games. I know you like your tablets and all your devices and going outside and playing with your friends, but I'm going to teach you something that's going to actually help you long term.
Absolutely.
And
absolutely.
If you want to know about it, there's a book made on it. I promise you. There's a book.
But but we don't read now. Since we don't read, I know you've heard of Dr. Claude Anderson, Powernomics. This, Dr. Boyce Watkins,
yep.
The Black Business School. There are, Rich Man, Poor Dad. I think it's can't
Rich Dad, Poor Dad. Yep, that's an amazing book that
it's an amazing book.
When I first started doing this.
Right. So the information is there. We're not taught that information in K through 12 because we're taught to be good employees.
Exactly.
We're not taught to be employers. When I was, I remember, I just saw my parents yesterday, so I'm smiling because my dad, like how you feel about yours, my parents are brilliant. My dad, I had, there was a bank called Security Pacific Bank. I'm kind of telling you how old I am. And when I was in high school, my dad opened me an account. I had a job at 13 years old, lied about my age. 13 years old, my dad said, well, if you're gonna have a check, then you have to have a checking account. So he opened up a passbook savings account for me at the bank. And I would get on the bus and go down to the bank and put my money in the bank, or if I need to take money out. If I had $100, he would tell me, take $30, put it in the bank, and then you spend the rest. And he would keep telling me that. And then he would tell me on my 14th birthday, he took me to Watts. And it was a part of Watts. We used to go to the Watts parade, and I used to love that parade. I used to love Lockheed Band and all that. But he took me on a drive to an area I had never seen before in my life, and I was scared. And it was my 14th birthday present. I'll never forget it. He said, you have a choice in life at 14. He said, you can live the way we live or better, or you can live like this. The choice is yours. It's your choice. And so he would always tell me, anybody, he said, anybody can be a dummy.
Doesn't take much work.
Could be a dummy. It doesn't take much work. And so he had him and my uncle and this Nigerian guy, they had a company. My dad, they always had some kind of business they were doing on the side. And he would always be working, and I would never say, Dad, you're never home. Well, you know what? When it was time, boom, they did this, they did that. They were always in another country. They did this, they did that. And I'm like, where's all this coming from? Because he told me, he planned this. Being without taught him a huge lesson, and he vowed we would never be without. And so we have to have that mindset. It's not about, I won't leave you nothing for another man. I've heard people say that, well, if I die, you won't give it to, it's not about that. It's about the legacy that you leave. You're leaving, you know what? Other people leave their kids a foot, they have a foot up.
Yep.
A legacy. Yeah, a legacy. They leave them a legacy. We don't do that. It's time to leave a legacy. It's time to build businesses. It's time to, I drive all the way to Inglewood to get the things that I need, because outside of groceries, I drive to Inglewood. Why? One, I'm from Inglewood, and I believe in recycling our dollars. I'll go to Leimert Park. I'll find out who's in Riverside. I'll drive. I get on the freeway and drive to get what I want. Why? It's not so much, well, why can't you just get it here? It's because I understand the value of the dollar and how it needs to circulate, and how
Right.
we need to be responsible with our money. You can't go out and buy. Why are you buying these Nikes? Why are you buying something that you can't afford? Put some of that money away. And if you can't afford to buy any property in California, buy it in the South, buy it in Arizona, buy it in Vegas, buy it and hold
Yep.
on to it. You know, retirement. I retired in my early, I don't want to say my name. Anyway, I don't want to say my age, but I retired pretty early. And when I was retiring, I had a few people were angry and said, how did you do this? How are you leaving? And I'm still here. We came in at the same time. How are you leaving? And I said, I planned it. And I didn't, and people said, well, you didn't retire. You just went to something else. I said, but I watched my father do stair steps. He retired and he went to another job, and then he retired and he went to another job, and then he retired. And so he's got all these retirements, and 86, he just made 86 years old. And I want to do that. It's
Congratulations
kept
to him.
yes, he's in his full right mind and everything. And he'll sit there and tell you, you know what's getting ready to happen, right? So you need to do this with this and put this over there. And he's sharp. And we
Mhm.
need to, we don't, you being young, your father was older, and you listen to your elders. And our young people need to listen to their elders. They've already made all the mistakes that you all haven't made yet.
Exactly. I like to think of it in the sense of I've seen it done wrong so many times, because I had a lot of brothers and sisters that went to jail, that ended up in poor financial situations, that ended up doing the wrong thing for the right reasons, right? And I've seen it done so many ways that were wrong, and I decided, you know what? I've seen them do it long enough. I don't think I want that result, so I'm going to do something different, right? And I think as a community, we should learn from our elders and adapt via the youth, right? So the youth has something to add, so does the elders, right? So in that sense, I've kind of learned, okay, everyone around you and everyone you meet has something that they're going to teach you, and you're going to learn something every day. That way you can continue to grow and evolve into a better you, right?
Mhm.
And in a sense, I think no matter whether you start from the bottom or you start from the middle or the top, you always have to be trying to be better, whether it's in your family life, your finances, right? Just having more fun, or your fitness. Either way, as a community, we all have to be better, right? And I think a big part of the reason why a lot of us kind of are not necessarily afraid, but we just don't make a move to be better, is because it's okay to not do it. It's okay to be on Section 8 and Social Security, and it's okay to have food stamps. And if I'm not bagging on that, because that's exactly where I come from. My family was on Section 8, we had food stamps, and we were all on Social Security. Okay. But it's not okay to stay there. It's okay to be there, but not to stay there. You have to be grateful for everything that has been provided for you, but also understand, hey, this isn't it. This isn't where I'm gonna stay. I have to get more, right? And in that sense, it's just, man, there's so much to learn if you just open your mind and get away from the bad habits, right? I believe that you are the average of the 5 people you hang around most. So if you hang around 5 bums, you might be the 5th. Depending on how long you're there, you might be the 5th. But if you hang around 5 people who are elevating and constantly growing, either you are going to grow in and grow onto them, or you're going to push yourself out. That is simply how it works. Everyone around you is either growing you, adding to it, or subtracting, right? You always want to be the one adding to. All right, I'm growing. I have my circle of friends who are like, not necessarily uncomfortable to be around them because they're my friends, but I know when I go around them, I got to step my game up. I got to bring my A game. They're not going to allow me to stay where I'm at. They're going to push me to be better. They're going to call me out when I'm doing something wrong that's counterproductive to what I want in the long term, right? Those are the kind of friends you need, not the ones that are going to say, hey, it's okay to go out and do whatever and blow your money and mess up your family life, if you guys kind of get what I'm hinting at there. Those aren't the friends you want to be around at all.
It's two
Because in that
types of
sense,
friends.
they're not really your friends.
Right.
At all.
Assets and liabilities.
Yep. Either you're
That's
an
how I
asset
look
to
at
me
it.
or you're a liability. Everything we do in life is mostly a business transaction, right? Getting married, you get married because it makes a part of your life better. It doesn't fix everything, but you know, hey, without this person, I don't know. This is the one right here, right? In that sense, that's why I have my significant other, right? She not only makes me better, but we're able to help each other. We're always adding. We're always pushing each other to be better. It's like, hey, well, if your goal is this, I think you can do this. I believe in you. If no one else does, I do. All right. So in that sense, always have people around you that are adding to you, no matter what. Just continue to add and add and add. Never take, right? It's always better to give than to receive.
Mm-hmm. Mm-hmm. Absolutely.
Yes, ma'am.
What advice would you give someone who is on the job? What do you know? One of the things that I've, even myself, I don't have everything. I don't, at all. I'm just out here, and I'm doing what I've been commanded to do. I'm doing what
Right.
I've been taught to do, based on other, I've seen what I've seen and decided it's not for me or it is for me. One of the things that someone tried to tell me about, but I was afraid, I'm being transparent. I was afraid to invest in a certain thing. If you're an employee, some companies offer deferred comp. And many of us don't know about deferred comp. And had I done deferred comp when I first came to my last career, I would really have done better than I did. What can you tell us about deferred comp? Because the fear is, oh, I got to put more money somewhere, and that means that's less money coming home. Tell us about deferred comp.
Don't be afraid. Seriously, don't. I don't care what investment it is. If you read it over, because I would say that is the biggest problem, not only just in our community, right? But just across the board. We kind of just, oh, okay, well, they said it's good, so I'm just gonna go with it. I recommend, okay, understand what you're going into. I don't like to invest in anything I don't understand personally. At least at the base level. I don't have to know everything about it and every single detail on how that works and how this works, but I have to know, okay, does it work? Is it good for me? And where's its track record? Has it worked for other people? Right? And if you are the first one going into it, like something like the people that invested in Google and Amazon initially, right? Have faith in yourself and your understanding, right? So when it comes to like deferred comp plans, 401ks, TSPs, all the different retirement plans out there, right? Understand where they came from, the actual true nature of them, right? And how it works. That's most important, how it works. Because if you can't understand, okay, how it works, then you don't know what to do if things start to slow down or not work. Just to kind of give you an example of what exactly I mean. If someone, for instance, puts money into a 401k, right? And that's just the typical or standard retirement plan at any job, right? If you're going to put it in there and you don't understand the tax implications, right? Or what the actual rules are, what your access to it is, all that kind of stuff, right? If you don't understand that, then why are you giving them 10%, 3% of your earnings? Right? That's the first question. I'm not saying that it's not for you and it's not a good thing, because something's always better than nothing. Remember that. Something's better than nothing. But understand, okay, well, this, okay, now I understand it. Okay, this is for that reason, because everything serves a purpose. When it comes to the financial products and the financial world, everything serves a specific purpose. Now, you just have to kind of align your intentions and your outcome that you want with what that product is able to provide, right? That's with anything, whether it's life insurance, investing, 401ks, TSPs, the whole entire across the board. Understand, okay, what this provides, what my intentions are, and how closely do they align, right? So for you, I would say if you were going to do the deferred comp, right? Do your research on it. Don't be afraid to dive in and ask questions, right? Because I've been in a position where I'm working in this industry and I'm learning and I'm growing here. And then I start a new job, right? And they're just telling me, oh, well, yeah, just sign up for it. Because most times when you're in like a orientation, they're not going to go deep into it and explain to you the tax implications, the rules, the penalties, the fees, all that stuff, how much access you have to it, because they're not your licensed financial professional. It's not their job. Their job is to get you to sign up for it. That's it. Person doing the orientation, that's their job, right? And everybody has a job to do, right? But you as the employee, because it is now on us 100% to make sure our retirement is paid for, right? And our futures are planned, that you have to understand, okay, well, I got to get educated about this stuff. It's not something that should be, oh, well, I'm putting $10,000 or $20,000 a year into it, and on a scale of 1 to 10, I understand it 3. Well, that's a portion, that's a huge chunk of your income, and when it comes to that, that's what I mean when I say pay attention to your money, is understand where it's going and why. Right. So that's my take on, because I don't want to specifically get into a specific product, because I know I can kind of nerd out on that stuff, right? Because it's kind of what I do, right? But in that sense, I would recommend having something is better than nothing, and understand exactly what you have, how it lines up with your goals, and what its intentions are.
Now, as we come to a close, I want to say this. The purpose of today's show, if you're looking for specific in-depth information, that is your responsibility. This is financial literacy and responsibility. It's your responsibility to, you have Google if you don't like to read, or you can listen to a podcast. I highly suggest Dr. Claude Anderson, Powernomics. He's on YouTube all day. Dr. Boyce Watkins, Rich Dad, Poor Dad.
Yep.
Do you have any other books that you
Yes,
recommend?
I do. The Intelligent Investor by Benjamin Graham. And I forget who the author is, but it's called The Financial Pocket Knife. It specifically breaks down a life insurance, right? Life insurance that builds cash value. It specifically breaks down the details of that. It actually goes into how it fits and what its intentions are and what it can and cannot do, where it fits in your financial portfolio, right? And I also kind of want to say this, for our community, I know over the course of the last couple of years, I've been doing this and sitting down with our people face-to-face and over Zoom. It basically comes down to 2 things, right? Does it work for me, and can I afford it? Right? That's pretty much what everybody's asking themselves at the end of the day. When you sit down with a financial professional, does it work for me, and can I afford it? I personally say, figure out if it works for you, definitely, 100%. But does it add the value that you're looking for, not the price? Because we're gonna, as a community, we have habits, and it's important for us to break those bad spending habits. And if we do that, then price no longer is an issue, right? Because I've sat down with people spending $3,000 a month of their $5,000 check on fast food. Well, if you stop eating out and you just cook at home, you could probably bring that down to about $1,500. Now you have $1,500 of disposable income. Now there's more money than money, right? So in that sense, I recommend all of you that are going to be watching this, go home, check your bank accounts, check your statement, see where you're spending money, and break it down into 3 categories: travel, food, right? And overall expenses for living. And then figure out, okay, where can I reduce and subtract and completely phase out certain things, right? Like for me, my wife and I, we've made a decision, okay, we're going to completely phase out eating out, right? There's no eating out at all. There's no stopping at a drive-through just because it's convenient and we're hungry. We're going to go home and we're going to cook, and we're going to make those sacrifices because we have a long-term goal that we'd rather achieve than eat the hamburger, right? I mean, I can wait 10 minutes to get home and then make it there, which is probably another 30 minutes, 40 minutes, right? I can wait 40 minutes, or I can spend $20 on a hamburger that's only going to satisfy me for the night versus investing in myself and my business, where that's going to satisfy me long-term and sustain me long-term, right? So those are the kind of decisions you have to, and the mindset you have to have when it comes to spending money and making money. I would also recommend evaluate what's important to you. Is your time with your family more important than making that extra money? That's a conversation that you have to have with your spouse or your significant other, or just yourself if you're single, right? That's because long term, yeah, we're all gonna have to make money and stuff like that, but it's the relationships you build. That's kind of what puts together your quality of life, is your relationships, right? So in closing, I will say, if any of you actually need guidance or you just have questions on specific plans, my name is Andrew Sims, and my number is 951-732-0130. You can reach me at that number 24/7. If I don't answer, leave a voicemail or a text message, right? My wife's number is 510-928-2104. Her name is Io Jenkins, right? You can also call 24/7, leave a voicemail or a text message, and we'll get back to you as soon as we can, right? As long as it's within a reasonable hour. Obviously, not 3 a.m, but call us at 7. From 7 till 12 o'clock at night, that's when we're available.
Now that is a resource for you. And if you don't feel comfortable calling them directly, you can always send us an email at hkinterventions.org, and I will put you directly in contact with Andrew. Our time is up for this episode of Harrell Kegler Presents. Again, you have the information to reach Andrew. Andrew, I thank you for this conversation. It is much needed. I really need the community and the family to get on board. It's playtime is over. And as you said, and I say often, insanity is doing the same thing over and over and expecting a different result. I want to also say, please click the like button and subscribe. Everything that we talk about on the show is specifically to uplift us and empower us in these uncertain times. HarrellKeglerInterventions.org. I am Dr. Jamil Harrell Sims, and this is a part 1 of a 3-part series. Next part, we're going to talk about credit, and we're going to talk about building business and property. So you don't want to miss that information. It's not costing you a dime. You're going to sit at home anyway. So thank you again. Don't forget to like, subscribe, and Andrew, you be blessed. And I really thank you for giving us this wonderful conversation that was much needed.
Thank you for having me. It's a blessing when I'm able to in any way, if this helps you guys at all, it's a blessing. Please, please, please. Even if it's just to say thank you, don't be afraid to reach out. And if anyone's, because we're actually growing and expanding, I'm actually sitting in our new office that we just signed a lease to. If anyone's growing and they're curious on what the financial industry is like and Can they do it? Don't be afraid to give us a call. We're always open to having a conversation. Thank you so much for having me and spending this time together. I hope we can work together more in the future.
I know we will. So, family, forever forwards, never backwards. Peace, family. Hotep, shalom.